Hi, Warriors. Happy New Year to you. When I left you last Wednesday, we were at 111, which was my target from the buys between 108 and 107. 107.50 was the number. Set to liquidate short dollar positions, all of them, including long euro at 111 or better. Aussie at 68 or better. Aussie's coming off as well and showed the three drive to a top formation in cable holding up better than euro, but I still think we'll at least challenge a 125 level. I talked about that the yen could rally with the dollar. And then also Canada, 32 was a target. Look at this, 32 and a nice bounce. I think that there's potential for a rally to 135, maybe 136. And that is predicated on a pretty good call I made from up here that I thought we'd go to par 90 and stayed patient for it. We got through par 90 by 30 pips, went to par 60. But look at how even last time into July, once we got back above par 90, we were off to the races. We didn't even have a daily close underneath it before the reversal. So you were prepared for this target, and then you were prepared for a turn at these levels. My best guess is that before we're complete in the next, maybe by month end, early February, who knows sooner, the way markets are moving right now, best guess is 104.80, which would be 61.8 back of this first decline, and then a continuation of the bear market in gold. I said not to have FOMO in gold. You probably were saying I shouldn't have listened to Dale last week, but we're getting that pullback. Gold has been stronger than silver. Silver really looks ugly. Said don't have FOMO on the physical and don't have FOMO on the miners. Just want to also show you this. This is a pretty important breakout that we're getting in the gold silver ratio. Look how many tests we had. And this is a lesson that when a level is tested again and again, the more it's tested, it's like slamming into a door with your shoulder. The first time, it doesn't give much. It doesn't give much, but it's weakening. So it's weakening and finally break that door down, and we have a breakout. This portends continued outperformance of gold over silver. Well, you can see silver's down over 66 cents today. So definitely that is not a silver squeeze chart. The silver squeeze chart will be when this ratio is headed south again. But it could be setting up a nice selling opportunity because I do expect silver to come back and exert its leadership this year, in fact. So I want to also cover Apple. I talked about Apple being under, all the divergences that we had in Apple. Look at that gap down. So last week I talked about that we had daily divergence here at the highs. Even broke out my telescope to show you weekly divergence right here, glaring. You don't have to even do a reading. This high, this reading compared to what was happening last July at the highs. So gap down on, I believe, some down ratings by analysts from outperform to hold. We'll see if we get through the 180 level. It opens the door for 161. In fact, I talked about all the Mag 7 stocks being under pressure. And what I was talking about as far as the downside target in NASDAQ 100 looked like a very aggressive target, but you know what? It's a 200-day moving average. Like I said, it's all one market. When the dollar is good, they sell off everything. When the dollar is strong, it's like the balloon is inhaling. And when the dollar is weak, the balloon begins to expand and fill up again. So I believe that until this dollar rally terminates, that all assets will remain under some pressure. And that even includes a tremendous bond rally that we had and the 10-year yield that we had. and that's part of the recovery in the yen. You have the 10-year trying to turn up here. We broke 120 bips from the highs in October. I know people looking for new highs, but let's be conservative and say, halfway back, right, would be 440. So also in the longer duration, we could be under pressure. This was one heck of a move that I identified down here. Of course, I got cute at 92 and 94, thought we'd get a pullback. But now I do believe we will, 92 or 90, that the market came into the new year too exuberant with pricing in 6 rate cuts. Every asset before the dollar turn last week was railing to the upside. So the market got drunk on their expectations of interest rate cuts for next year of 6, and they're beginning to reprice it. So if you look at all the MAGA stocks, I don't think you really want to be long any of them. And this is something that I talked about before the end of the year was wait for this MAGA sell-off. There's Netflix. Okay, there's Google. I mean, none of them look real good to me. Here's Meta. All right. Microsoft trying to roll over as well. And then I'll wrap it up with the miners. So here's Microsoft. And it's called a couple lower. Here's Apple again, shorter term. So I wouldn't be buying Apple looking for a gap fill here. Talked about it with Mike yesterday. We get through 180. I have some confluence here at 165. We'll see how that works out. And let's go to the miners. They're going to open lower with, gold and silver under pressure. But I said not to have FOMO. A dark horse, Endeavor, looks like new lows are coming probably today. Said to be patient, and Fortuna that will have a chance between 340 and $3. I think that's coming. SILJ is called lower. Let's see where that ends up. And this is for you, Mike, if you watch my stream today. Came up with this line in case we do get a pretty good sell-off in the market and gold, everything for a few weeks. This would be a place I'd be interested in your preferred long on Newmont down there around 36. So there's going to be an important buy in euro and everything else. I want to show you guys this. Almost forgot to, but look at this weekly chart. Look at where it stopped. Okay, that's the 200 week moving average, I believe, and above that's a breakout. So next time we're through 1140, that measure is pretty good, maybe up to 120. And you had the exact same thing on the weekly and cable. I thought, where are the moving averages? There we go. Abracadabra. So that's where cable stops. So, we could be talking about weekly breakouts. So we're going to be looking for spots to buy in euro. I think that it could be, maybe around the same levels it was last time before this trade. This was wave 4, this was 5. So 4 would take us back to, 7.5 again, maybe 8, maybe won't pull back that deep, 108, but this is a break to buy in the dollar, just like eventually this could be a break to buy in the gold and the miners setting up. It's going to be a important break to buy in Aussie. I was thinking that maybe we could see these levels again, 65.5 or so. I do have some stuff at 612, another 100 lower, but we'll see what happens. I think we could key almost the whole market, since it is all one market revolving around the dollar. Strong dollar, everything goes down. Weak dollar, you could be long the world. So why don't we keep an eye on all asset classes as the Dixie approaches the 61.8 level of 104.80 and see where things are, because we could key off that number for potentially a dollar turn, that this will rally up into this zone and then roll over. And if that's the case, it'll be a buy in a lot of different asset classes. So stay tuned. But this, to me, I'm viewing as a bear market rally to correct this first wave down, and this will be two. And then the next wave could be the money wave, because it could be a fib extension of this. And this wasn't bad. It was, 107.40, about 650 points. So the next decline could be over 1,000. So we go to 105, we could be talking 95 on the next decline. So I'll see everyone in the room. I hope that my analysis and giving the whys is helping you learn to repeat some of the things I talk about, like three drives and confirmed highs and divergences, and looking forward to having an exciting year together. Good hunting. Remember, don't just count your pips, count your blessings. Adios.